This is Optimal Finance Daily, episode 154, MMM Challenge. Get yourself a lower mortgage rate by Mr. Money Mustache of MrMoneyMustache.com.
Get ready to maximize your potential with Optimal Finance Daily, the podcast that brings you the best content in personal finance 5 days a week. Your optimal life awaits. Now here's your host, Dan Warren.
Hi everyone, welcome back to Optimal Finance Daily, where I read to you from some of the best personal finance blogs on the planet. Today's post comes to you from our old friend, Mr. Money Mustache. And by the way, if you have any topic requests, anything you'd like to see covered here on the podcast, come and let us know at oldpodcast.com. And once again, we're lucky enough to have FreshBooks sponsoring today's episode. If you're a freelancer or small business owner, self-employed, or need to invoice clients, FreshBooks will make your life a whole lot easier. Come check out all their features for free for 30 days. No credit card necessary. Just come by freshbooks.com/finance and enter Optimal Finance Daily in the How Did You Hear About Us section. And with that, let's hear from MMM as we optimize your life. MMM Challenge. Get yourself a lower mortgage rate by Mr. Money Mustache of MrMoneyMustache.com. It's been a while since we did an MMM challenge, so I've got an extra good one for you today. One which can save many homeowners out there $105,000 over a 15-year period. The challenge is getting yourself a better rate on your mortgage. Looking at the ING Direct website recently, I noticed that home loans were going for an astonishingly low rate of 2.99%. The last time I paid attention to mortgages, it was to refinance my own house a couple years ago, and at the time, even the 5% rate seemed amazing to me. The lesson to me was that in this weird financial aftermath of the Great Recession, there are some sweet deals to be had for those paying attention. Any reader who has not recently refinanced to a lower rate should definitely do some shopping around. But today, I noticed there is an even more advanced strategy that has opened up. Check out the current APR spread on interest rates, which you can look up on places like Bankrate, and also check SOFI, S-O-F-I, typically better loans without an origination fee. 5/1 adjustable rate mortgage loan, 2.972%. 15-year fixed, 3.604%. 30-year fixed, 4.410%. These rates include all fees as part of the APR number, so when comparing to your own interest rate, it should be equivalent to getting the rate above and paying no fees. Lender fees are silly and are often way too high from less reputable lenders. ING Direct seems to have some of the lowest loan fees overall, but again, the rates above supposedly are the effective rate over the life of the loan after including the fees. Before I became mortgage-free this year, my strategy was always to go for the 5/1 ARM mortgage, adjustable rate mortgage. That way, you get the lowest rate for 5 years and you can really go crazy paying off principal of the house because your interest cost is so low. If the rates start to creep up at the end of the period, you can always lock in for a longer period at that time. Some people, out of fear of the unknown, like to go for a longer lock period. Thus, in the United States, the 30-year loan is very popular. The issue with 30-year loans, however, is that they are stupid. They're deliberately designed so that you start off just barely paying any principal at all, $263 per month on a $200,000 loan, so that you really just scrape along in debt for a good part of your lifetime. It is so close to the tipping point that if you cut the payment just $200, it would be a 100-year loan. A few dollars lower, and it would be an infinite year, interest-only loan. Going a few dollars higher, on the other hand, gets you out of debt drastically sooner. Now, certain advanced mustachians will point out, but I prefer an interest-only loan to make principal payments on my own schedule. Of course, I won't really take 30 years to pay it off, but since the interest rate is low, I want to stay leveraged to make bigger investments in stocks instead. Okay, fine. For those people, the 30-year is fine in some cases, but still not in today's market, because look how much lower the rate is on the 5 and 15-year mortgages. Let's say you have a mortgage right now, $200,000 at 4.5% on a 30-year schedule. Your monthly payment is $1,013 a month, of which $750 is interest and $263 principal. If you are too conservative to switch to a 5/1 loan, then I still recommend that you go out tomorrow and refinance your loan into a 15-year fixed loan instead. You don't have to worry about interest rates going up after 15 years because your house will be paid off then. But can you afford the payments? Surprisingly, because of the lower interest rate and the stupid, almost infinity nature of the 30-year mortgage, you can easily afford them. Check it out. The monthly payment on the same $200,000 mortgage with a 15-year schedule at the much lower 3.604% APR is only $1,439. Only $426 a month more, and all of a sudden, your payments are doing this for you. $839 of principal, $600 in interest. You're paying $426 more per month, but your interest costs have actually dropped by $150 per month, and your principal payment has more than tripled. Congratulations, you're actually paying off your house, sucker! Over the lives of the two loans, the 30-year holder will pay $165,000 in interest, but you will pay only $60,000 in interest. I think almost everyone can find a way to scrape together $400 per month when such a wealth-building opportunity is at stake, right? The frugality tips alone that have been shared by Mr. Money Mustache in the past month have already freed up more than that amount of money. Cut your cable TV, drop to a less expensive car, ride a bike for local errands, drink less beer, stop buying coffee outside the house. You're already more than there. If you still don't agree, feel free to stop by my new retail location next to Mr. Money on Main Street in Longmont for a complimentary punch in the face. Because it might help instill some wisdom that is already quite obvious to me. $105,000 in additional wealth over 15 years is worth working for. You just listened to the post titled MMM Challenge, Get Yourself a Lower Mortgage Rate by Mr. Money Mustache of MrMoneyMustache.com. And by the way, MMM has some footnotes in that post explaining some of the math, but I thought that might be a little overboard to actually read to you here on the show. So if you are interested in that, you can just visit his post online. It is linked in this episode's description and at oldpodcast.com. And a reminder that today's episode is being sponsored by our new favorite accounting software, FreshBooks. They've redesigned their platform to make it even easier to use. It was easy before, but now, if you're not a numbers person, especially if you're not a numbers person, check them out. Invoicing, accepting credit cards, time tracking, receipt tracking, logging expenses, all of that stuff is easier than ever with FreshBooks. And again, completely redesigned to match how typical small business owners and freelancers work. So if you're looking to do any of those things that I mentioned, you can get a completely free 30-day trial to check out every one of their features. If it's not for you, no worries. You don't need to use them, and you don't have to stop payments or be worried about anything like that because they don't even ask you for a credit card when you sign up for the trial. They've set all this up for listeners of this show, so to try it out, come by freshbooks.com/finance and enter in Optimal Finance Daily in the How Did You Hear About Us section. That's 154 episodes down, and I'll be back tomorrow, as always, with a post from Kaylin Bruce of Money Mini Blog. So I'll see you there in the Friday show where your optimal life awaits.
Hello, Life Optimizer. This is Justin Malik, creator and producer of this podcast, but also Optimal Living Daily, the show where I read to you from even more blogs covering finance, productivity, minimalism, personal development, and more, from incredible bloggers like Derek Sivers, Zen Habits, Mark and Angel, The Minimalists, and all the ones you hear on this show too. So if you enjoyed today's episode and like taking amazing blogs on the go, come on over to Optimal Living Daily and subscribe to that one too. And together, we'll start optimizing your life.
You've been listening to Optimal Finance Daily. Be sure to hit the subscribe button to stay up to date on each new episode and head to oldpodcast.com. That's OLDpodcast.com for a free gift as well as more actionable tips and resources to help you maximize your potential. Thanks for joining us, and remember, your optimal life awaits.